On how tariffs are impacting the apparel industry. I'm joined now live by Sara Hsu. She is an associate professor of economics at State University of New York at New Paltz, and she joins us live from Beijing. Welcome back, Sara.
Thank you.
So let's begin with something I think every consumer around the world wants to know, especially those in the United States who are going to be paying these tariffs. What kind of price hikes are we looking at? Because you're not just necessarily factoring the tariff, but whatever types of margins these companies need to make a profit.
Right. It's not entirely clear what percentage of the tariffs the companies will pass on to the consumers. And it's definitely going to impact the consumers in terms of higher costs, as well as the companies. So there might be a split in terms of, the company taking part of the hit and passing part of the cost on to the consumers as well. And starting January 1st, the tariffs will go from 10% to 25%. So that's a really significant increase.
Let's move to the idea of reshoring, because that's sort of at the heart of what the Trump administration seems to be trying to get at. There are costs for companies to leave their production facilities and move, and there are contractual obligations to employees, municipalities, and that's not something we hear a lot about in the dialogue. How high can those types of costs be for apparel makers in particular?
Right. So the cost can be really high. And, just to backtrack a little bit, a lot of the American multinational firms are producing their goods overseas. So that's why the tariffs on exports from China are going to impact the American multinational companies. And these multinational companies would like to move to a different place, especially given the tariffs that have just kicked in. But it's really hard for them to do. In order, for example, for them to set up shop in Cambodia or Vietnam, they potentially have to open up their own factory because they don't have the types of buildings and factories available. And they also have to deal with really shoddy infrastructure. So if they're moving to a country that has low wages, then they're going to be moving to a country that also has a low level of development. So the costs are really high, and this can take up to 5 years to move from China to another country. Coming back to the U.S., we haven't really seen this happen. A lot of companies are not reshoring to the U.S. Instead, they're relying upon automation in order to produce their products because American labor costs are so high.
And of course, there's also an impact on productivity when you're going to these other countries. But I just wanted to talk a little bit more about something that I heard in the public hearings that the U.S. Trade Representative's office had, especially from apparel makers. I mean, I was just astonished at all of the different kinds of companies that came out of the woodwork, from wedding dresses to handbags to people who make zippers. One thing that I heard a lot about was what the U.S. does and what it doesn't do. And what I heard was that the U.S. does not have, for example, cut and sew operations anymore, hand beading operations. And the question I have is it even realistic to expect those types of parts of the apparel industry to return to the United States?
It's really not. It's something that you have to have a company situation in which there are lots of skilled workers in that area. And the U.S. just doesn't have it anymore. And we also, along with that, we see that China produces not only the textiles, the fabrics that are used in the production that happens in China, but they also produce a lot of the components used in apparel over there, such as the zippers and buttons and ribbons and all of those things. So pretty much everything has been outsourced to China. The U.S. imports about 40% of its clothing from China and about 70% of its footwear.
Lastly, I just want to bring up the fact that major U.S. retailers who are already struggling against e-commerce, et cetera, they have written a letter to the president talking about their desire for these tariffs not to affect their business. Is this really going to be for them, big box stores, the nail in the coffin? They're already fighting an uphill battle.
It's really going to be hard. So stores that are really struggling against discount clothing stores like TJ Maxx and Marshalls, stores like JCPenney have really struggled to keep some sort of profit margin amidst that and amidst online retailing. And now this is really going to cut into their margins even more. It's a question of whether they continue to, they pass on the cost to their consumers, or whether they actually eat those costs. They can't really afford that. So both ways they're set to lose, and it's just going to be an uphill battle for them from here.
Sara Hsu, wish we had more time. Thanks for the conversation live there in Beijing for us.